Welcome to the Global Equity Valuation Competition. My name is Andrew Stotts from the Valuation Masterclass. This competition is such an exciting competition. Next, we're going to have Adhirat, who's going to come on. He's going to talk about Indian Hotels Company and make his presentation. Just want to mention that our tool partner for this is Koifin. And of course, we're sponsored by Valuation Masterclass and the Valuation Masterclass Bootcamp. So let's bring Adhirat. How are you? Are you ready to go?
Yeah, I'm all right and I'm all set to go.
Okay, so I'm going to first bring up your presentation. 1 second. And that looks good. I'm going to, first I'm going to position this just so I can see. Okay, now what I'm going to do is I'm going to leave in just a minute and then you just start, okay? You've got 6 minutes. I'll come back in after 6 minutes and say time's up, and then we'll go into Q&A. All right. Yeah. So I am going to leave. I'm going to leave now. You can start now.
Okay. Yeah. So imagine it's 1903, Mumbai. Jamshedji Tata has just been turned away by a European hotel in his own country. So he builds one. Not just anyone, but one of the best that the world has ever seen. The Taj Mahal Palace. Over 120 years, this small act of defiance has compounded into 360 hotels, 13 brands, 32,000 keys, and most of all, a well-known brand in the hospitality sector. My name is Adhirat, and today I am initiating and hold coverage on Indian Hotels Company Ltd with a target price of 590 and a downside of 7%. So just to know, this is not a negative call on the business itself, because it is one of the strongest growing businesses in India. The only problem is with its valuation. So if you look at the Indian hospitality sector over the past few years, it has gone through strong earnings as well as growth cycle. The demand continues to grow at about 3 times that of supply. So the current industry demand grows at about 5.7%, while supply continues to be at around 2.2%. Now, this is always an opportunity as well as a risk. So if you look at the top 7 cities and the gap between demand and supply, the top 7 cities contribute about 70% of the revenue to IHCL as well as its competitors. Now, the gap between your demand and supply becomes evident in this, because the gap is mainly due to lack of land availability, delay in regulatory approvals for your land, and third is the longer time needed for construction of a luxury brand hotel. So in some of these cities, it takes about 5 to 7 years. Now, this is a huge upfront commitment for the company to carry out its operation for capex as well as working capital. Now, due to this evident gap, some of the existing operators have benefited due to this structure. So IHCL is definitely one of it. If you look at IHCL's performance post-COVID, it had a 15 consecutive quarters wherein it recorded double-digit growth in its RevPAR. So RevPAR is a revenue per available room. For 15 consecutive quarters, the growth was double digits. EBITDA margins are steady at 39%. The growth continues to be double digits, and foremost, the occupancy rates are at 78 to 80%, which is like amongst the highest in the industry. But still, due to this, there are some concerns. Mostly, I will come to concerns later bit. But the growth for IHCL has been fueled due to some of the structures. Like post-COVID, IHCL has shifted from capex to asset-light model. Earlier, it used to own, lease, and operate businesses or hotels. Now, it has shifted to a management fee structure, wherein IHCL will come with its brand, its 120 years of legacy and experience, and just collect management fees revenue upfront. Now, this is estimated to contribute about 12 to 15% of the total net revenue for next year. Now, IHCL has also went through certain acquisitions, trying to diversify its portfolio. So the recent acquisitions in your Bridge as well as Atominton have contributed and made a way for IHCL to diversify its portfolio across wellness as well as leisure sectors. Now, despite all this, I think most of the price has already been reflected in all the optimism that is there regarding the growth has already been reflected in the price for IHCL. That's why I recommend the hold recommendation, and this stems for a price of 590. Now, if you look at, I've used my DCF for DCF model as a primary valuation model, and other multiples like EV revenue, EV to total number of operational keys, and EV to total as a secondary valuation methods. So if you look at PE for IHCL, it is about 45 times earnings. Now this is a 56% premium over the industry median. Now, if I look at the story for this PE multiple, post during COVID, all the operations came to an game stop for IHCL, right? So the earnings went negative. But post COVID, your occupancy rates as well as the average revenue per room grew at a staggering rate. That's why the PE shooted to like 100. But since then, it has been moderating down. Currently, it is 45, and I strongly believe that it has still room for moderation to go about 35 to 38 times earnings. Some of the risk that IHCL currently has is definitely due to the large acquisitions that is it is doing can pose a threat for its brand diversification as well as portfolio diversification. So IHCL is previously and currently known as a luxury hotel. If it too tries to get into your middle market segments like Ginger, it might it might dilute the brand itself. Also, in the top 7 cities, we contribute about 70% of the revenue to IHCL. If there is a major entry of a large player or your existing players shift to asset light model, it might affect occupancy rates as well as average revenue per room for IHCL. So combining all of this, I initiate a hold coverage for IHCL and with a target price of 590. That is my thesis. I'm open to questions.
Excellent. Okay, so let's go through a few things. The first thing is why are you having a hold? What if you couldn't have a hold? Would this be a buy or would this be a sell in your mind?
Yeah, my thesis for this whole recommendation is, I strongly believe in the business for IHCL. Right, it the growth is good, the net profit is good, the bottom line is also good, but the major concern is with its price. So as I mentioned, the P shooted to like 100 post COVID in the years of 2022 and 2023. Since that, it has been moderating to about, and currently it is still above 56% premium above its industry peers. Now, the premium that IHCL commands might be justified due to its high growth, but again, this is not. I still believe there is a moderation there in the price itself. Yeah, so
Yeah,
that's
so
why.
and I mean, if you look at the margin, let's say the average EBITDA margin is 35 or so.
Yeah,
It's seasonal, so in December
yeah,
it's natural that we're going to have a higher one. But
yeah,
making a EBITDA much higher than that would be quite hard. I would assume,
yeah,
it's not going to go to 45 or 50, that's for sure. And
exactly.
growth has been strong. So my question is, why not a sell?
Why not a sell? Yeah, definitely. Because even though if we look at the cyclicity of the business, and a strong or a simple change in your earnings margins or revenue growth might impact your multiples as well as the earnings base, thereby contribute to a lower PE multiple. But I still believe the business is right, because if you look at the recent acquisitions, also the occupancy rates as well as the average revenue per room that IHCL commands in the industry, it is amongst the highest. Now, there might be concerns that this might moderate in the coming years to come because of the threshold that threshold in this cities for occupancy rates. But this is my thesis for not recommending a sale and a hold, because the business is still good, but the price, I think, might be a concern.
Okay. And we have a question that came in. If you don't know that topic, that's fine. What's your view? What view do you have about Merck? MERC?
MERC. Sorry, sir, I'm not aware of
Yeah,
Merck as such.
that's okay. And I saw that the company has done some international expansion. Is that just a small thing, or is there a bigger opportunity in international expansion?
Yeah, so like 5 days ago, they released their con call for last financial year, and they have mentioned that they have been expanding into international portfolios as well. But again, that also contributes to a risk as well as reward ratio. So the recent West Asia crisis has contributed to a negative effect on their international portfolios, like their occupancy rates as well as average revenue for Dubai as well as London hotels have been impacted. So impact is about 200 crores or so on the revenue. So I think yes, it provides an opportunity as well, but risk also should be taken into consideration while giving these
And
things.
and right now, people are worried about, because of the what's happening in the Straits of Hormuz and all of that. They're worried about oil prices being high and driving a recession. What is your perspective on that? And also, if that happens, what's the impact on the company?
Yeah, right. So the West Asia crisis has definitely affected the international portfolio for IHCL. There's no doubt in it. But again, the West Asia crisis has also contributed to a rupee devaluation or rupee depreciation against the US dollar. So that has led to more people not taking foreign trips. So the occupancy for some of these cities has actually grown if you look at the recent quarter numbers and compare. So again, yeah, West Asia crisis might affect the international portfolio, but for the domestic ones, I think there is a bit for growth metrics.
Fantastic. Okay, how does it feel to complete this competition?
Honestly, it was a very hard task. So going through all the rounds, actually, this is the third round. I got to learn a lot. I challenged my assumptions, and I think this has made me a better analyst as such, improve my thinking.
Yeah, and it's great. I mean, your presentation was excellent, and all of so far the ones I'm seeing, very good. So you've been learning and you've been improving, and that's what this is all about. You know, when I started as an analyst, I just went to work and started trying to value companies. But with this type of competition, it gives an opportunity for everybody to come in and try to improve themselves. And it's really the only way to improve, right? Is that you got to
Right.
get out there and fight it out. So well done.
Yeah. Yeah. Thank you, Andrew.
Okay, thank you, and we'll see you in the Slack channel.
Okay. Yes, sir.
Yep. Another great presentation. That was Adhirat, and he talked about Indian Hotels Company, and his recommendation at this time was a hold. But I just thought it was good presentation, interesting company. The challenge for me is keeping up with these guys because, these are interesting companies and I don't necessarily know about them. So I'm trying to, figure out what I can understand about these companies as fast as possible. So just want to highlight to everybody that the Global Equity Valuation Competition is sponsored by Valuation Masterclass and Koifin, who's been a tool partner for us so that the students and the participants have an opportunity to use that tool. My name is Andrew Stotts, and I'll see you on the upside.